Putting 100% of your money into a single asset might seem like the fastest way to get rich, but it's also one of the riskiest moves that you can possibly make. If you ever wondered why so many people lose big when they go all in, this video will show you exactly what you're missing. The power of diversification. Diversification isn't just a boring finance buzzword, but it's the key to protecting your money from huge crashes while still capturing growth from different markets. So let's dive in and see why spreading your investments is the smartest move that you can make. So what is diversification? At its core, diversification means spreading your investments across different types of assets, regions, and sectors in order to reduce the overall risk of your portfolio. Instead of putting all your resources into a single stock or into a single asset, diversification means mixing things up. This reduces the chance that a single event wipes out everything that you have built. The main goal of diversification is to manage risk while aiming for steady and long-term growth. When your money is tied up in one sector or one asset, you are vulnerable to whatever hits that specific market. But when you diversify across different asset classes, like stocks, bonds, real estate, and even cryptos, you lower your exposure to any of these investments' risk. This balance helps protecting your portfolio from sharp declines and keeps your money growing over time. So now that we have seen what diversification is, let's see a few ways in which we can apply it. There is no one-size-fits-all approaches, but here there are some practical strategies that you can start with. The first one is sector diversification. You can spread your investments across industries like technologies, healthcare, finance, and consumer goods. Each sector, in fact, reacts differently to economic changes, so balancing them can stabilize your portfolio. The second one is geographic diversification. Don't limit yourself to one country. Investing in international markets protects you from domestic downturns and lets you tap into growth opportunities worldwide. For example, if the US market stumbles, markets in Asia or Europe might still be thriving. The last one is the theme-based diversification. You can also diversify, in fact, by investing in broad themes, like renewable energy, blockchain technology, or biotech innovation. These themes can capture emerging trends while balancing risks within the theme itself. Imagine you have a portfolio made up entirely of tech stocks. If a tech bubble bursts or a major regulation hits the industry, your portfolio value could plummet quickly. Now, if you had diversified with stocks from different sectors, the losses in tech might be offset by gains in some other sectors. Think then about geographic diversification. Say all your investments are in the US stock market and the economy enters a recession. Your portfolio could take a serious hit, but if you had exposure to growing markets in emerging economies, those could help cushion the blow and provide additional growth. A common mistake is to think that diversification only means investing abroad. But that's only part of the picture. Diversification also means balancing different asset classes and sectors to minimize risk. Another pitfall is over-diversification, where you spread investments so thinly that your returns get diluted. The goal, like for everything, is to find a smart balance. Enough variety to protect you, but not so much that your portfolio loses focus. Diversification is your financially safety net. It doesn't guarantee profits or prevent losses entirely, but it's the best tool to manage risk and to smooth the ups and downs that come with investing. Going all in on any investment, especially if it's very volatile like stocks, is a gamble that can backfire. So before chasing the next big trend, or before putting everything into a single asset, remember, spreading your investments wisely is how you build long-term wealth. If this video helped you understand what diversification is and why it matters, give it a thumbs up, please, and consider subscribing for future videos like this one. Also, I would very appreciate if you would share your thoughts or your own experience with diversification in the comments. As usual, I thank you for watching, and I will hopefully see you in the next video. Bye. I need to cut my hair.